Good morning, everybody. This is the live market open for Tuesday, May 24th. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Hi, everybody. As always, we'll cover recent developments in markets, the various charts and levels. We do have some movements, especially in commodity currencies, the next 24 hours, and of course, answering your questions. If you cannot see the chat box alongside the screen, please go to the address right here, tlk.io/fxstreet-forex-live-video. Okay, as we've done in recent days, we'll also do sort of a special segment that will be offered as a separate clip. The topic for today will be the case for a July rate hike. But let's begin with the news, with the important stuff. Good morning, Dan. So commodity currencies are weaker across the board. We did see that yesterday with the tumble down of the Canadian dollar, challenging resistance. We'll show the chart very soon. Oil prices went down. Now we're seeing fresh falls, not only in the Canadian dollar, but also in the Aussie and the kiwi. Today is Eurogroup Day. IMF wants unconditional Greek debt relief. Germany does not want debt relief for Greece, but Germany wants the IMF to be part of the deal. Let's see how this is resolved. My bet, another can-kicking exercise down the road until at least after the Brexit referendum. Policymakers do not want to shake things up, do not want to rock the boat, and want the issue under the carpet, as usual, I guess. Yesterday we had quite a few Fed officials talking. Bullard, Williams, and Harker, all of them leaned towards hiking. Bullard was optimistic about the economy, but did not mention any date. Williams talked about raising rates in June if the conditions are okay. I mean, data dependent as always. And Harker, which is of the Philly Fed, relatively new member, and not that he's not a voting member. He supports a rate hike. None of them surprised. None of them sort of went from dovish to hawkish or the other way around. All in all, and yeah, another thing to mention is that the Japanese finance minister talked about being comfortable with dollar yen at 109, which is more or less the current level. And the second statement he made is that he won't comment on Forex levels. Funny stuff as usual from the land of the rising sun. Anyway, of course, they want a weaker yen, but they cannot intervene too much. And and in general, Asian markets this morning are relatively gloomy, falling. Okay, so let's look at the charts and then talk about events that we had yesterday and today. So we're seeing here the euro dollar chart. This is one of the more frustrating ranges. Today we have the Eurogroup meetings. Hopefully it'll move something, but look at this very, very narrow range. Not for the first time this year. 112.05 at the moment. It fell to 111, 99, and 112.27 was the high. Less than 30 pip range this morning. I defined the range as 111.80, which was the low last week, and 112.50. But we haven't really reached 112.50 anyway. This is the current range at the moment, a very narrow range, not for the first time. If we zoom out just a bit, you can see how euro dollar traded in frustrating ranges. It did fall down to this lower range last week thanks to the Fed minutes, which were relatively hawkish. Okay, I see your comment about, it says, well, good morning, Luca, Fabian, Dan, Ed. It says that no debt reduction until the German election in 2017. Let's see it stretch. Well, that's a long time along the road. And remember that the German finance minister Wolfgang Schäuble and Chancellor Angela Merkel, they both promised Parliament that the IMF is on board also on the third bailout, okay? On the other hand, the IMF didn't say so and wanted already last year debt relief, okay? So Greece, a small country, 2% of Eurozone GDP, suffering from austerity measures for already 6 years with no real results. The debt is only higher and the economy is in a worse situation, quarter of GDP lost. Anyway, it's seeing the battle between the titans, between the IMF and basically Germany and the European Union in general. And it's hard to, so far everybody's been kicking the can down the road, and we'll probably see more of that right now. So far, the recent round of the Greek talks, the debt crisis, has not moved markets like it did last year. I can talk about the Greek debt crisis for hours, but we're here to talk more about what's going on in markets. So I don't expect any big movements from, today we'll probably have more discussions, pushing it to the next meeting. June 23rd is the meeting they want to skip over, and perhaps at the same level of importance we have June 26th, the elections here in Spain. Remember, one of the reasons that Greece was hit so hard last year with the closure of the banks was to deter Spanish voters from voting to the Spanish Syriza, known as Podemos, sort of sister parties across the Mediterranean. Not talking about it can help. Jax, good morning. Does it seem there's a lot of speeches and a lot of talking heads from all different countries saying a lot of nothing lately? Don't these people have jobs? Yeah, their jobs. They do have jobs, and these jobs are paying quite well. I would say. Well, we know that Mark Carney makes something like £800,000 a year, and he didn't even change rates once. He's completing his third year quite soon. He did run a very nice marathon in London last year. More seriously, it's called forward guidance or communications strategy. Anyway, what we heard yesterday from the Fed did not move markets quite a lot. Yeah, pumping hot air is their job. Yeah. Anyway, let's continue with pound dollar. We had a few more Brexit polls. There weren't. Another poll by ORB showed 55% for the Remain campaign, 42% leave, similar to their previous poll. The pound is a bit lower in general, but that's because of the US dollar strength. 144.87 is the current level. 145, just under 145. 144.40 is some kind of support, resistance 145.80 and 146.50. Dollar yen. So dollar yen fell from the highs, currently 109.35. The 109.40 was the previous line of resistance. I would say resistance is somewhere around here, but it's not that strong. 110 used to be a strong line, but I would look at the wider limits of this range. I would say 111 on the top side and 108.25 on the downside. And Japanese yen is often a safe haven currency. This morning it's a bit more stable. So we have stability in the euro, in the pound, and the yen, but commodity currencies are on the move. So the Canadian dollar is edging higher. Dollar CAD is edging higher. The Canadian dollar is edging lower. The move isn't that great today, but there was a strong move yesterday. The Canadian dollar was the weakest link yesterday, with sort of oil prices under pressure. They didn't go too far, but they also didn't move higher. And with still lower production in Alberta and Canada, it isn't helpful for the Canadian dollar. 131.70, some kind of support now after the break to the upside. 132.20 is the next line of resistance. The moves here are a bit slow. Anyway, 130.80 is support and 133.10 is strong resistance. The Aussie dollar, here we have a breakout under the previous low of 71.75. So this happened just a few minutes before we began the show. Moving to the downside, lots of pressure on the Australian dollar. We had a speech from Glenn Stevens, the outgoing governor of the Reserve Bank of Australia. Stevens did not say anything new, only that he's committed to inflation targets, something like that. But the pressure on the Australian dollar continues. Why is that? That's because, there's ongoing talk about Chinese credit bubble, okay? More headlines about that, about a burst of this bubble coming in the not so distant future. And in addition, there is, of course, a chance that the RBA will cut rates again, if not Stevens, his successor, later along the line. His name is Philip Lowe. And the next line of support for the Aussie, 71.40. well, it's not that strong of a support line, and 70.50 is the next line of support anyway, where levels last seen in March. Resistance, strongest resistance line is at 73, around number. Okay. Kiwi dollar, also feeling the pressure. We talked about this range, 67.20 to 68.40. A dip under the range, getting close to what used to be a previous line of support or resistance, 67, around number. Currently at 67.10. The Kiwi is falling more or less this morning at the same scale of the Aussie, sort of following, getting carried away. But the Kiwi has better fundamentals, higher interest rate, and less of a desire to cut rates over there. Okay. More comments here. It says normal people in the street don't care about near bailouts, want to understand, so they just get on with their slave lives. We must now work to pay our debts, so governments need slaves for the economy. I believe it's what boils. Yeah, well, I wouldn't call that enslavement, but yeah, many people in power have an interest that we will not look around, just keep on with our lives, working and consuming. Yeah. Anyway, Lucas says, looks like markets are finally realizing there will be FNX. Yeah. May see indices finally correct lower. Yeah. We'll talk about, yeah. The chances of rate hike are not anything. We have that right here. Updated. This is the implied probability for rate hike. It hasn't moved too much. Okay. 70% against the rate hike in June, 30% for rate hike. Of course, the chances have moved higher since that release of the Fed minutes. Okay. Yeah, but maybe commodity currencies, as Lucas says, are the first to break the big canaries. The commodity canaries in the coal mine, if you wish. Yeah, it's the first sign of risk off. Chances haven't increased. The Fed officials didn't move markets too much, as Jack said, but yeah. But yeah, the mood is a bit worse than it used to be. Okay, let's continue with a few more currency pairs. Yeah, explosive moves have started in pound commodity currencies. Yeah, and they can carry away the euro, hopefully, and also the yen. Dollar Swiss. Here we are seeing some stability above the 99 level, under parity. 98.50 and 98 are levels to watch. The Swiss franc did weaken in recent weeks, and not only against the US dollar, which has been recovering, but also against the euro. Okay, euro. So euro Swiss 111 at the moment, very stable. So perhaps some consolidation after this move to the upside. 112 is strong resistance, 110 is support. Okay, euro yen battling once again, recovering from the lows. So we did see very stable euro and some kind of a slide in the pound. So from the 76.50 level, we did bounce back up. Another battle with the veteran 77.40 level. So 76.50 is support, resistance is at 78.30 and 79.30. Okay, so some recovery yesterday, especially for euro pound, currently sliding just a bit. Euro yen remains very stable because both currencies are stable. Well, we did have a fall yesterday under 123, currently 122.55. Strong support at 121.65. Strong resistance at 125. So the yen did gain some ground yesterday. Currently, we are at very stable markets. Pound yen, the Gepi, the dragon, did fall down. Well, the pound did slide yesterday, but now it's stabilizing, perhaps trying to recapture the 158.50 level, which it lost. Further resistance, the round number of 160, followed by 162.50. Support 156.60 and 155.80. Okay, and we can't complete the round without talking about oil prices. So we have oil prices at 47.76. feeling the pressure. Yesterday we already felt lower ground. It's the price of this black gold is still maintaining relatively high ground, but not cannot seem to push higher. I think we have for some room on the downside here. It's not moving anywhere fast at the moment. More comments here. Lucas says no Brexit, Fed hike, lethal combination. Yeah, it could be a lethal combination for commodity currencies, but no Brexit is also a risk-on event. It's also good for the world as markets perceive it. So the pressure is more from a rate hike. Ed says indexes are a farce because they pick and choose companies in and out of the index so they can manipulate market cap overall. I'm not sure that the indexes change that frequently. Anyway, Jack says, is the Bank of Japan intervening? Seems like the yen is trying so hard to weaken, but market is fighting it. Yeah, we've seen in the past few months the Bank of Japan trying verbally and sometimes acting in markets to weaken the Japanese yen, but market forces have been much, much stronger. Okay, so sorry. I don't see any intervention, especially as we just had those G7 meetings in Sendai, Japan. So I think maybe Japanese officials are talking about the disorderly moves that have strengthened the Japanese yen, but I don't think they're intervening at the moment. We don't see any big spikes, okay? So maybe they're intervening quietly, like the Swiss National Bank. I have no evidence about that. But they're not making any big moves, any big splashes. We did hear again the Japanese finance minister Taro Aso talking about 109 as a sort of reasonable level for the Japanese yen, for dollar yen. Okay, good morning, Sirik. Yeah, okay, so that answers the question about the Bank of Japan. So we've covered currencies. Let's talk about the event we had yesterday. Wasn't too much, as always. Mondays are a bit slow. Eurozone PMIs were quite mediocre, so German manufacturing and services PMIs came out better than expected, but the French figures missed and the Eurozone figures weren't that impressive. It didn't move the euro too much, as you can clearly see. US flash manufacturing PMI by market, not by ISM, less important but still worth noting, missed expectations with 50.5 points, lower than expected, and just in growth territory, but not going anywhere. I mean, not showing any kind of real growth. Eurozone consumer confidence beat expectations with -7 points, but the minus sign there implies pessimism. So it was better than -9 seen in the previous month, but not really encouraging. And Glenn Stevens didn't say anything important. Today we have more important events on the calendar. First of all, the Eurogroup meetings I already mentioned. Clash between the IMF and basically Germany about Greek debt relief. I expect them to kick the can down the road and not reach any conclusions. We'll have lots of headlines, lots of hot air, as Jack said, but I don't think it'll move markets. Let's see, unless we have a really big decision. At 8:30 GMT, we have the UK public sector net borrowing, PSNB, basically how much debt the UK government takes on itself. So it's expected to show a rise to £6 billion from 4 billion. More debt for the government. I don't think it'll have huge impact. Oh, before, just worth mentioning, a decision quite soon at 8 GMT by the Swedish National Bank. They just have a very negative interest rate, -0.5%. So it shouldn't move the wider markets, but I'm sure we'll. I mean, if the Swedish cut rates even more, it sort of allows the ECB also to cut rates in the future. I don't see any immediate impact, but just it's interesting to watch. Yeah. After that, we have more important event. In Germany, we have the ZU figure, the ZU survey. More important figure is the German one, not the all-European one. It's expected to rise the sentiment, the headline figure, the economic sentiment, from 11.2 to 12 points, showing relatively low, but still optimism about the German economy. There's also the all-European one and other sort of sub-components. It's not the most important think tank in Germany. IFO is more important, and we have this data tomorrow. But we do have, it still moves markets because it's released before the IFO figure. At 9 GMT, 11 here in the Eurozone, and 10 in the UK, Mark Carney faces British politicians once again. The Canadian governor of the Bank of England made a lot of waves by warning about the implications of a Brexit, of a British exit of the Eurozone, talking about the chances of a recession, and now he'll be talking about, in theory, inflation, the mandate of the Bank of England, but he'll also be talking about a Brexit. He can make a lot of political headlines. I do think he has an impact on the British public, well, some impact. So it'll be interesting to watch. If he says anything really related to monetary policy, like if he's very dovish, it could weigh on the pound. And if he's more optimistic, it could boost the pound. He does have the ability to move the currency, okay? Because he spoke not that long ago, I'm not sure if this will have a big impact, but it's still worth watching, okay? So both events are at the same time, the ZU figure and Carney's speech. Okay, Eurogroup meetings are held all day, but mostly, I mean, the headlines are coming out all day, but the meetings themselves are in the afternoon. And I highlighted a few other things. Yeah, so the financial stability review by the ECB, they could, well, in theory, it's only about financial stability, but they can talk also about monetary policy. Just at least watch the hour, 12 GMT. Not sure it'll move the euro. A bit pessimistic about the euro. A more meaningful event for markets is the new home sales release at 2 p.m. GMT. Every sale of a new home implies more economic activity. Okay, so we're expecting now a small rise from 511,000 to 523,000. This is an annualized figure. Okay, good figure, good for the dollar, bad figure, bad for the dollar. And for those who are trading the kiwi, which is weakening, we have trade balance at 11:45 MT, and that's right here. We're still expecting surplus from 117 million to 60 million. Any figure that's positive is positive, I believe, for the kiwi. And the last event, yeah, well, in Australia, construction work done. If you're awake that late at night and trading the Aussie, it's something worth watching. I see a few comments here. Lucas says the mother of all head and shoulder patterns, euro pound target measure target around 72.50 on a break of. The break. Problem is everybody's looking at that. Yeah. Well. Oh, that's a nice chart. Thanks, Luca. Luca often shares charts with us. So yeah, that certainly looks like head and shoulders. Big head over there, and then two shoulders, more choppy shoulders. But anyway, this implies a fall in the Aussie. In same levels like the Aussie, sorry. It's the euro pound. Euro pound for euro pound fall, we would need no Brexit. I mean, to fall so much, but who knows? You can certainly have these kind of falls. So thanks, Luca, for this interesting chart. Everybody's looking at the head and shoulders. Everybody's also looking at the Brexit. Yeah. Guess we won't see much movement in markets until Yellen speaks later this week. In a week. Well, I know she speaks on June 6th. I don't know if an earlier speech, that's in 2 weeks' time. Dan asks, what news sources do you prefer to find out what is said in speeches in real time? Twitter. Just Twitter. There are a few accounts I follow. I have on Forex Crunch a list of the best Twitter accounts to follow. So, and that's the best real-time source of news. Also, FX3. Also, I covered on Forex Crunch, Forex Live. I mean, there are lots of great websites, but if you want sort of the screaming headlines in real time, Twitter is a great source. I'll ask, if I trade? No, I focus on publishing and I'm doing the show, so I don't trade, so it's impossible to copy. Yeah, okay. Yeah, so we've covered the events for today. Many questions. Let's take another look at the charts. Then we'll have the special feature for today, which is in the biggest market mover, the Federal Reserve. So, Eurodollar is moving a bit to the downside. Just when I was being so negative about Eurodollar, I mean negative about the lack of movement, it's beginning to move just a bit. 111.80 is the level of support. So the US dollar is now strengthening also against the euro, well, a bit more also against the pound, and well, against the dollar, and against the yen, not so much. Commodity currencies are clearly under pressure, okay, with extended moves in dollar CAD, Aussie dollar, and Kiwi dollar, okay? Ed mentions Forex Factory is one of many calendars I watch as they always have something missing. Yeah, Forex Factory is a great calendar. I use the FX3 calendar on my website in Forex Crunch. Lucas says turnaround Tuesday looks like running out of momentum up here. Watch for one more push, like 111.25 in Eurodollar, then reversal into Yellen's speech. Yeah, perhaps we had the turnaround Tuesday a few weeks ago, and the dollar made a significant move to the upside, and this was extended with last week's Fed meeting minutes, okay? Yeah. Yeah, Yellen is a key event. That's on June 6th, okay? So now let's do the special, well, just a moment before that, we have here another comment. Also 144.10 and cable level, I will use it to my long-term cable long position, yeah. So if you're looking for no Brexit, which is currently sort of not priced in, but it seems more likely than not, according to bookkeepers, according to opinion polls. Yeah, 144.10. Well, that was the level last week. Let's add this level right here. Yeah, makes sense. Also been a low earlier in this month. Yeah, I think we can have lots of twists and turns in the pound until that June 23rd referendum. That's 3 weeks to go, 4 weeks to go. Okay. Baron's calendar is great for oil and bond traders. Anyone wants info there? Okay, thanks. I wasn't aware of this calendar. What about Eurodollar for today? Eurodollar is leaning lower. 111.80 is support. 112.50 is resistance. Watch out for Eurogroup meetings to move the boat. And before that, also the zoo figure, but it can have limited impact unless it's a huge, huge surprise. And they're coming from Ed. Ed shares the Baron's calendar with us. So thanks for that. Okay. Okay, now let's have the special feature for today. So this is our special feature for today. The topic is the case for July rate hike. Okay, so far the Federal Reserve moved only when they had a press conference, right? So the Fed meets 8 times a year. Every second meeting, there are fresh forecasts and a press conference. So far, these are the only events when the Fed moved, announcing the end of QE, talking about ideas for a rate hike and raising rates back in December. They always say that every meeting is a live meeting and that they can always call a press conference if they make a change in policy and provide more explanations to markets. That's why most market analysts usually look only at the big meetings, at December, March, June, and September when they have a press conference. And that's why we're talking about June or not June. The word June actually appeared 6 times in the recent meeting minutes because the focus is on June, not on July, not on October, November, not on months when there are no press conferences. They usually use the other meetings just to give us hints about the bigger decisions coming on later across the road, along the road. Why could this time be different? Well, they meet on July 27th, and this time I suspect that they could announce a press conference. Why would they opt for July? I prepared a few reasons for that right here in the slide. So first of all, it's after the Brexit referendum. Again, there's a higher chance, a good chance that Brits will vote to stay in and that they will not rock the global economy. If Britain leaves the EU, it has big implications. The implication is not only that a different trade deal for the UK, but also perhaps the beginning of the end of the EU and lots of movements in markets. So the Fed would not like to raise rates on June 15th with Brits going to the polls on June 23rd. Another reason to hike in July is that it's far enough from the US elections. So if they wait until September when they have fresh forecasts and a scheduled press conference, it's too close to the elections in September and they would be seen as impacting markets, okay? Another reason to hike in July is that by the end of July, they also already have the initial estimate for Q2 GDP. We're expecting a rebound in the US economy in the second quarter of 2016. What's happening actually now? We are now in the second quarter, and they'll have the data, the first estimate already available around the same time. They could also do something different this time, call a press conference. Let's say after we have the Brexit referendum and Britain decides to stay in, I'm assuming that in the end of June, the beginning of July, they could say, okay, you know what, in our July decision, we're announcing a press conference. That could be a very thick hint that that they're going to raise rates. In addition, why do I think we could have a rate hike in July? Is that bond markets are implying that. Okay, I can show you again. The chances for a rate hike in July, according to bond markets, are close to 60%. Okay, 41.6% that rates will remain unchanged at 0.5%, and higher chances for a rate hike. So bond markets are telling us that. Of course, bond markets do not know everything, but Fed officials are beginning to talk more and more about July. We heard that first from Bill Dudley of the New York Fed, number 3 at the Federal Reserve, and we also heard more people talking about the summer, which summer is July, basically, okay? So I think there's a better chance than not that we'll have a rate hike in July, assuming the data is okay, assuming no Brexit, but that would be, that's certainly a possibility. Another reason to hike in July will be that, well, in August, markets are usually more quiet, and if they hike in July, when markets are still quite active, this rate hike could be forgotten in August. Now, it's not guaranteed. Markets last year at the end of August crashed, especially in China, but we could still, it's still usually a more quiet period of the year. We could see things, I mean, slipping through this rate hike and forgetting about that. So anyway, this is the case for rate hike in July. I believe that if we have a rate hike in July, it'll be very, very well communicated. It will strengthen the dollar just a bit, will not cause a market tantrum, and eventually will sort of even provide a relief rally for markets. It means commodity currencies could rise and the Japanese yen could weaken. So perhaps the opposite reaction of what we could expect, because the Fed will manage to communicate it so well that it'll pass through smoothly. Now, if things get worse towards July, they can always back off. But if they raise rates, it'll be very well communicated. And I think markets will accept it in a good manner like they did back in December. Another reason to raise rates in July is that, as I said, it's a little bit of a quiet period in markets. And also in December, they raised rates just before Christmas. It wasn't totally quiet. They weren't sort of slipping it in very quietly, but it was just before the holidays, and they could do it now just before the holidays. Okay, so that's our special event for the case for a July rate hike. Okay, a question here by Luca. Do you think that the recent swing in polls away from Clinton and in favor of Trump, please Lord, don't let it happen, yeah, may impact the dollar and risk sentiment even so far away from election? So far, we haven't seen an impact on the elections from opinion polls. I think we're a bit too far away. I did mention that, I wrote about that. The Real Clear Politics average of the 5 recent opinion polls show a draw between Trump and Clinton, and all of them, if you compare the ABC poll to the previous one, the NBC one, the Fox one, the CBS one, whichever one, if you just compare May to April, you see Trump gaining ground. So there's a clear trend over there, at least between April to May. Things can change in other directions, and I also hope Trump will not be the president of the United States, the world superpower. It can change sentiment. Trump is sort of a wild card, and Clinton is running basically on a third term for Obama. I mean, Clinton is continuation, Donald is a disruption. So I think it'll have more impact later in the summer when we have the conventions. The Republicans meet in Cleveland, and the Democrats in Philadelphia, and we'll have more political headlines over there. Okay, another comment here. Cable is breaking out. Time to trade. Yeah, Alex. Thanks, Alex. Yeah, we're seeing a big move, a sudden move up in pound dollar. I don't know what's the reason for that. Well, big. It's a sort of 30 pips, but quite surprising move there. Let's see if we have. No, we don't have similar moves in other currencies. So it's the pound moving on its own. Let's look at the dragon. Yeah, also here, pound yen is moving 158.90. Okay, let's see if I can find any kind of headline to explain this move. But yeah, that's certainly surprising. Yeah, Carney will speak later on, and we have the public sector net borrowing, which I don't expect to move the boat too much. But that's certainly a surprising move from the pound from cable. Yeah, so Luca's long-term cable is moving. Yeah, might there be anything in the economic calendar today which could offer support for gold indirectly? Well, gold is supported by central banks keeping the easing policy. So perhaps if the ECB talks about in the financial stability report about more easing that could support gold prices. If we have some unexpected, unscheduled Fed officials talking dovish, that could support gold. As far as I see from the calendar, don't have anything really gold related. Well, only maybe the new home sales in the United States. If they're very poor, it could imply pushback in rate hikes, and that's supportive for gold. Pairs to watch today. I would say pound dollar because, well, first of all, we're already seeing movements right now, and because of Carney's speech, testimony, okay? Up already 30 pips. So I would say the pound remains in focus. Maybe we'll have new opinion polls. Nothing scheduled that I know of, but we have opinion polls every day. And these are interesting days for the pound in general. And hopefully euro dollar, this is based more on hope and on the Eurogroup meetings, but not on recent reality, the recent past, which has been quite disappointing for euro dollar. So we are seeing euro dollar edge towards the lows. Maybe some headlines from the Eurogroup can push it lower, or perhaps some news, good US figures, good home sales figure can push it lower. To 111.50 is the next level of support, and then 110.70, but it's more wishful thinking than anything else. Also another sell limit, 1307 waiting. Euro pound breaking yesterday's low. We see a retest of 76.50. Yeah, that's an interesting. So we talked about the euro and the pound against the dollar. Now we're seeing euro pound slip from resistance at 77.40. Maybe we'll have this break of 76.50. Okay, for that we'll need, of course, a weaker euro, which we are seeing now, and a stronger pound. We would need the very disappointing ZOO report, disappointing headlines from the Eurogroup, and some optimism from Mark Carney. The combination, lethal combination, could push it lower. Okay. So let's reach the wrap up for today. So the wrap up for the live market open for Tuesday, May 24th. We are seeing some movement in markets, mostly with commodity currencies. Stock markets were lower, and so are commodity currencies. Fed officials did not rock the boat. They did not say anything new, but the US dollar remains the cleanest shirt in the dirty pile. And the yen also comes along for the ride, and commodity currencies are the weakest. We heard the IMF saying again they want unconditional debt relief for Greece, want to push back Greece's debt, to defer payments to 2040 and ending them at 2080. Probably will have just a deferral of the decision, the regular can kicking down the road. Lots of headlines are expected to come out of Brussels, but real decisions not so soon. Let's see, this will grab the headlines today. But basically, there's a problem. Germany wants the IMF to be inside, but without debt relief. The IMF wants debt relief. Otherwise, it's not in the bailout. If there's no agreement, they just decide not to agree to defer the decision. That'll be interesting today. Fed officials, we talked about that. The Japanese finance minister talked about dollar yen comfortable at 109. Let's see if this is maintained. Yesterday figures, weren't that important. Some disappointments, some mediocre figures from the US with the flash manufacturing PMI, and unconvincing figures also from the Eurozone. Today on the calendar, as I mentioned, the Eurogroup meetings, UK PSNB, the public sector net borrowing, probably showing more government borrowing from the public. German's economic sentiment at 9 GMT, expected to show a slightly more upbeat sentiment among German businesses. Maybe this could stabilize the euro, which is sliding at the moment. Mark Carney talks the inflation hearings in Parliament, and the Brexit will, of course, take center stage. He has been blamed of interfering, but I think he does have an impact. Let's see if he talks against the Brexit once again. I mean, not against, but warning about the implications. He's playing along the Remain campaign. We have the ECB Financial Stability Review. Usually not a market mover, but if they talk about monetary policy, especially about dangers to financial stability from deflation, that could weigh on the euro, but let's see for that. A significant US release is the US new home sales. Every sale of a new home triggers lots of economic activity around that. Expected to show a small rise. For those trading the kiwi, which is on the back foot, but a relatively strong commodity currency, we have the kiwi trade balance, New Zealand trade balance at 11:15 GMT, and worth mentioning also construction work done in Australia at 1:30 GMT. Looking at charts, euro dollar is leaning to the downside within range so far, not breaking lower, but certainly showing weakness within the range, mostly dollar strength here. So 111.87 is the current level. 111.80, 111.50 are lines of support. Further support at 110.70, resistance 112.50, 113.35. Pound dollar, surprisingly strong. I really don't know what's the reason for that. 145.25, maybe it's a new opinion poll. 145.80, 146.50 on the top side, 144.10 on the downside, followed by 143.70. Dollar yen moving a bit up. That's the dollar strength we've been talking about. 109.50. 112 is strong resistance. 111 is strong resistance. Strong support 108.25. Canadian dollar showing weakness, but most of the move came out yesterday. Next line of resistance 132.20 and then 133.10. Supported 130.80 and 130, the round number. Aussie dollar pushing, breaking into lower ground, 71.64 the current level. Further support 71.40 and resistance 73. Kiwi dollar 67.20. Used to be support and move under this level. Let's see if it's sustained. Among commodity currencies, as I mentioned, the kiwi is stronger. 67 is followed by 65.50 is strong support. To the top side we have 68.40. Okay, so that's the wrap up for today, but before we move on, I see a few more questions. Oh, by the way, pound, the June vote, probably brokers will change margin requirements, try to avert another Swissy fiasco killing positions. Brokers will need, holding pound like me, need diligence on account margin leverage. Yeah, that's a good point, Ed. Yeah, we've already heard that IG has announced margin changes. So if you're trading with IG, check out their news regarding trading around the Brexit referendum, not only in the weekend before the publication, okay? Not only in the weekend, actually in the weekend before and after the referendum, and I think even one weekend before that, also on the weekend of June 10th, okay? So basically for 3 weekends in June, if I'm not mistaken, but check out your broker, you'll have different margin requirements. Also, I believe, I haven't heard news from other brokers, but in the past, FX Pro, FXCM, others also changed margin requirements for relevant pairs. It was for the euro around the referendum in Greece, the referendum, and and as Ed mentioned, it's the Swiss National Bank that still has left, that we still have open wounds from that. Okay, so yeah, so thanks, Ed. I also thank you. Yeah, mine are already adjusting. Yeah, we'll probably see more of these announcements as we get closer to the event. Okay, so that's it for today. I wish everybody a safe and successful day in markets. It'll be interesting to watch the euro and the pound, and also other currencies as well. Commodity currencies are crumbling. So that's it for today. See you tomorrow. Thank you and bye-bye.